Hello, everyone, and welcome back to the G22 Report. I am your host, Johnny Market. Y'all know that drill. Hit that like button and subscribe if you already haven't, and turn on the notification button so you can get notified when I do my videos. So, anyway, let's get into it real quick. The computer's really broken, so I can't do like the share screens and all that other stuff. But the market was down today. The economic data, GDP came in less than expected, but it was quote unquote strong. It's just less than expected. Uh, Obviously, it's fake. It's not real. And pending home sales were up north of 7%, which was very unusual. But the prices, well, they went the S&P and Chase Case Shiller that was actually declined 3%. So, I mean, from a basic supply demand, sales are up, prices are down, sales are up. That goes to prove my point, I guess, that prices are the problems and not. But I don't even believe the sales number, the pending sales. I think they're making it up. It'll probably be revised down next month. And the reason I was mainly doing this video is this is very strong data. And remember the fundamentals. This is an election year. They will not, under any circumstance, allow the economy to look bad, whether it's true or not true. They will not allow the numbers or even acknowledge a recession when they're running. So, what does this have coming forward? I would say I do think over the next year or two there will be some sort of recession, whether it's a crash or just a decline. I think something will happen. We went over there's the consumer credit card bubble, which will the auto loans, residential real estate bubble, and the commercial real estate bubble. And what's going to happen late this decade or late or next decade early, the treasury bond bubble that will burst. So there's a lot of problems ahead. But going back, I think you can see, they're at a point where if they need to juice up the market and stop interest rates coming, they need bad data and they need the Fed an excuse so they can start just buying up all the assets to suppress interest rates. It's not going to happen unless they get bad data. So that will happen after the elections are over. And if you look at it, you look at every establishment sort of candidate, they need some sort of crisis so they can, for cover, so they can have these huge spending bills and dole out government contracts to all their buddies and pay off basically their bribes. But if you look at it under Uncle Joe, he had the Cookies 1.9 and he had the Inflation Reduction Act. Trump's not an establishment candidate, so I would not, you cannot really, he's not in this. If you look at Obama, there was the '08 financial crisis. There was the stimulus, Affordable Care Act. And then if you look at Bush, he had 9/11 and the tech bubble burst. So if you look at it since the 2000s, 9/11 really changed this country. If you look at it since the 2000s, they've all had some sort of crisis to cover up, manufactured or real. They've had something. So I predict something will happen with the economy because you can see, like, you look at it just now, Visa, they just laid off a bunch of people. Uh, a lot of employees and contractors are now being laid off. So credit cards are having problems. So jobs numbers coming up, I expect them to be very strong. Real? No, but strong on paper. If you see ADP, they're not even pretending that's sort of below. But anyway, that's all I have for today. Or hit that like button, Subscribe if you already haven't, or Rumble, follow me. I will reveal my X handle soon. I tweeted out, but just for the next week before, even in early November, remember the fundamentals. An election year. They will not allow the economy to look back. So, all right. See you next video.